हेलो एंड वेलकम टू दिस एक्सक्लूसिव कॉन्वर्सेशन। और आज के हमारे खास मेहमान है मिस्टर सचिन शाह, फंड मैनेजर एमके इन्वेस्टमेंट मैनेजर्स की। सचिन को 25 साल से ज्यादा का एक्सपीरियंस इक्विटी मार्केट्स में है। वो एक सीजन फंड मैनेजर है और काफी इन डेप्थ रिसर्च करते हैं वो इक्विटीज को लेके। उसके चलते उन्होंने इक्वल रिस्क एक मॉड्यूल बनाया है, इसकी मदद से वो इवेलुएट करते हैं और कंपेयर करते हैं लिस्टेड कंपनीज को ऑन वेरियस एस्पेक्ट्स ऑफ गवर्नेंस। आइए उन्हीं से जानते हैं ये मॉड्यूल क्या है और वो इसका इस्तेमाल कैसे करते हैं अपने जो इन्वेस्टर्स है, जो उनके क्लाइंट्स है, उनकी वेल्थ क्रिएशन में इन द लॉन्ग रन। वेरी गुड आफ्टरनून सचिन एंड थैंक यू फॉर जॉइनिंग मी।
Thank you, Geetu. Thank you so much. It is indeed a privilege and a pleasure. बहुत बहुत धन्यवाद। आपके सभी दर्शकों को नमस्कार।
Our pleasure, sir. सचिन जी, पहले हम शुरुआत करते हैं आपके इस मॉड्यूल से ही, जिसको आप इक्वल बोलते हैं। इस मॉड्यूल के चलते हुए आप कंपनीज को सेग्रीगेट करते हैं, आप कंपनीज को इवेलुएट करते हैं, कंपेयर करते हैं और अपने जो आपके क्लाइंट्स हैं, जो आपके कस्टमर्स हैं, उनकी वेल्थ क्रिएशन में मदद करते हैं, उनको अच्छे रिटर्न दिलाते हैं। ये मॉड्यूल है क्या? कुछ विस्तार से बताएं।
श्योर गीतू। एक्चुअली ये बहुत ही इम्पोर्टेंट पिलर है हमारे पूरे इन्वेस्टमेंट प्रोसेस का। ऑलमोस्ट 11 साल हो गए, 11 years back. When I joined MK as a group, I've been with MK for more than now 11 and a half years actually. Oh. And investing में एक सबसे बड़ा important चीज होता है the game of compounding, right? जैसे like Einstein said, the eighth wonder of the world is compounding. The people who understand it will earn it and people who don't understand it will pay for it, right? So equity का जो charm है, the real fun of investing in equity जो है is all about the game of compounding. क्योंकि ऐसा 2% ज्यादा रिटर्न भी मिलता है, लेकिन वो 2% अगर 10 साल तक कंपाउंडिंग होता है, so it's a very big difference, right? अगर आपको कोई बोले 10% compounded over 10 years and if somebody says 12% compounded over 10 years, that 2% is not only 2%, it can be at least 30-40% extra over that 10 years. So the whole fun is the game of compounding. So our entire investment process is based on finding these compounders. Now अब ये compounding अगर कोई भी बिजनेस में या अपने स्टॉक प्राइस में वेल्थ क्रिएशन चाहिए, then what are 2 or 3 very critical things, right? कहाँ पे कंपाउंडिंग होता है? कई बार बहुत सारे शेयर्स बढ़ते हैं फिर गिर जाते हैं। हम लोगों ने काफी बार देखा है, if you go back to the days of 1992 हर्षद मेहता के दिन, जब बड़ी तेजी होती थी, बहुत सारे शेयर्स आज उनके नामो निशान नहीं है। You go back to the IT के heydays of 2000, companies like Himachal Global, Silverline, DSQ, these were all very, very, I would say the dream or the darlings of the investors, but आज उनके नामो निशान नहीं है। तो ये क्या प्रॉब्लम हुआ? मतलब वो टाइम पे सबको इतना अच्छा लग रहा था, फिर भी these stocks have not delivered wealth. Whereas if you see on the other side, companies like say Maruti, which has given a fantastic compounding, वो 2001-2 में उनका लिस्टिंग हुआ था, वहां से आज 20 साल हो गया, it has given a fantastic compounding. A company like say Sun Pharma, which has given fantastic compounding, right? A company like Titan, which has given a fantastic compounding. So बहुत सारे names है इंडिया में जहाँ पे compounding effect बहुत अच्छा हुआ है। तो what is that differentiates between these companies which have created this compounding returns and which are these companies which have not created the compounding returns? तो हमारी समझ में ये आया, 2 चीज बहुत इंपॉर्टेंट है, बहुत ही क्रिटिकल है रादर। सबसे पहला ये है क्वालिटी ऑफ द मैनेजमेंट। जो मैनेजमेंट जो ये कंपनी चलाती है वो सबसे बहुत ही क्रिटिकल हो जाता है। एंड सेकंड इज द क्वालिटी ऑफ द बिजनेस। बिजनेस में इनहेरेंट प्रॉफिटेबिलिटी है या नहीं है, राइट? नाउ व्हेन वी टॉक अबाउट, व्हेन आई सेड व्हाट्स मोस्ट क्रिटिकल इज कि भाई मैनेजमेंट क्वालिटी बहुत इंपॉर्टेंट है, राइट? सो लेट मी जस्ट एक्सप्लेन इट अ लिटिल बिट इन एग्जांपल।
या श्योर।
जैसे 20 साल पहले 2000 में जब आईटी सर्विसेज एक बड़ा सेक्टर ओपन अप हो रहा था फॉर इंडिया, फॉर द ग्लोबल मार्केट्स। Today, the largest IT companies are actually servicing the global companies, right? Be it in North America, be in Europe, be in Australia, across the board. तो वो टाइम पे there were like 200, 300 listed IT companies and maybe thousands of unlisted IT companies, right? बट आज 20 साल के बाद वो अपॉर्चुनिटी वो टाइम पे तो सभी कंपनीज के लिए थी, राइट? ऑल द 300 कंपनीज के लिए सेम अपॉर्चुनिटी थी, बिकॉज टुडे आईटी एज अ सेक्टर, India has become nearly $200 billion of exports. It's a very, very large number, 200 billion from less than maybe $10 billion 20 years back, or maybe even $5 billion, right? तो 5 billion से 200 billion dollars का अपॉर्चुनिटी तो सबके लिए था, बट आज की तारीख में ये 20 साल में गिन के खाली 5 या 7 कंपनीज है who has actually capitalized on this big opportunity. आज इन्फोसिस देखे, टीसीएस देखे, एचसीएल टेक देखे, विप्रो देखे, कॉग्नाइजेंट देख ले, ऐसे गिन के और 3-4 कंपनीज रहेंगे जिनका आज प्रॉफिट है $1 billion प्लस, राइट? 7 से 8,000 करोड़ प्लस प्रॉफिट जो है आज। टीसीएस का तो 40,000 करोड़ हो गया, इन्फोसिस का 25,000 करोड़ हो गया, एचसीएल टेक का अबाउट 13-14,000 करोड़ हो गया, विप्रो का 10,000 करोड़ हो गया। तो ये कंपनीज जो है, इन्होंने ये 10 साल में या 20 साल में क्यों they were able to do it? Because the opportunity तो सबके लिए सेम था, और बिजनेस में इनहेरेंट प्रॉफिट भी सबके लिए सेम है, बट इट वाज दिस मैनेजमेंट्स, ये कंपनीज के, जिनके 3 टिक इन द बॉक्स थे। फर्स्ट, दे हैड द बिग स्ट्रैटेजी, मतलब उनको ये बड़ा विजन था, उनको बड़ी समझ थी कि ये कितनी बड़ी अपॉर्चुनिटी हो सकती है, राइट? दैट इज द मोस्ट इंपॉर्टेंट थिंग, बिकॉज कई बार हम देखते हैं कि मैनेजमेंट को ये उनकी अंडरस्टैंडिंग ही नहीं है, उनको बड़ा विजन ही नहीं है कि व्हाट इज द बिग अपॉर्चुनिटी फॉर मी। क्योंकि जब आपको ये समझ में आ जाएगा कि इतनी बड़ी अपॉर्चुनिटी, तो फिर आपके सारे स्टेप्स, आपकी सारी प्लानिंग वो हिसाब से होती है, राइट? सो फर्स्ट इज द मैनेजमेंट शुड हैव द राइट विजन। द सेकंड मोस्ट इंपॉर्टेंट थिंग इज द इंटीग्रिटी, क्योंकि हमने कई बार देखा है व्हाट लॉट ऑफ मैनेजमेंट्स आर पेनी वाइज पाउंड फुलिश, वो छोटी छोटी चीज के लिए, बड़ा चीज के लिए गड़बड़ हो जाती है। सो द इंटीग्रिटी, एंड इंटीग्रिटी मीन्स नॉट ओनली ऑनेस्टी टुवर्ड्स योर माइनॉरिटी शेयर होल्डर्स, बट टुवर्ड्स ऑल योर स्टेक होल्डर्स, बी योर कस्टमर्स, बी योर एम्प्लॉइज, बी योर एसोसिएट्स, बी योर वेंडर्स, यू नो, ऑल अक्रॉस द चेन। ये इंटीग्रिटी इज द क्रिटिकल थिंग। एंड देन ऑफ कोर्स एग्जीक्यूशन, आपको ये दोनों चीज करने के बाद देन यू नो जो भी अपॉर्चुनिटी आ रही है उसका बहुत ही अच्छा एग्जीक्यूशन आपको करना है, इन टर्म्स ऑफ ग्रोइंग योर कैपेसिटीज। IT companies, you have to recruit people, you have to create infrastructure facilities, you have to deliver in time your projects to your customers, you know, all of that, risk management across the board, right? तो जब ये 3 चीज सही होती है और बड़ी अपॉर्चुनिटी होती है, तब जाकर ये आपका वेल्थ क्रिएशन होता है। That is the most important. Like मारुति है, तो 20-25 साल में इंडिया में अगर पहले 1 लाख गाड़ी बिकती थी, आज 40 लाख गाड़ी बिक रही है। पर मारुति ने वो टाइम पे इतने अच्छे अच्छे मॉडल्स निकाले और 50% प्लस मार्केट शेयर पकड़ के रखा। That is a very important thing. They understood what Indian consumer wants. They are looking for a mileage. If you remember, one of their best AdWords, कितना मिलती है, about the average mileage for the fuel, and they also kept on upgrading their model, right? So I'm saying that these are very very important things. अभी इसमें जो इंटीग्रिटी जो है, right? To my mind, ये सबसे बड़ा प्रॉब्लम मैनेजमेंट में यहीं पर आता है। We have seen so many times, like I gave some of the names in the past, जहाँ पे अच्छे अच्छे, you know, those stock prices were doing very well in 2000 or 90s, but today they have disappeared because those managements did not have the right integrity, right? Now, generally, as fund managers, portfolio managers, as investment analysts, research analysts, we generally go and meet a lot of companies. We do our research. There are so many investor communication calls. लेकिन एक चीज क्या हो गई है कि लास्ट 20-25 साल से, जब एक्चुअली इन्फोसिस ने ये ट्रेंड बहुत अच्छा शुरू किया था 20-22 साल पहले, जब उन्होंने ये एनालिस्ट मीट्स बहुत अच्छी तरह से शुरू की, where they started giving very detailed, transparently very good presentations to the investing community. तो अभी 20-25 साल में सारी कंपनीज ये धीरे 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 सीख गई है. So today when we meet the managements, they will also talk what is music to my ears. उनको भी पता है मुझे क्या सुनना है, तो वो हिसाब से ही वो लोग बात करते हैं, right? So now the key, now my job has become a little more difficult because I need to read between the lines, and I need to find out that is the management really walking the talk. बोलना एक चीज होती है, but करते क्या, right? So that is where, and that's one part of it. Second part of it, when somebody says something, How do you interpret that is also a bit subjective. Like I and my colleague will go and meet the management. The management will tell us about their future plans. I will come out of the meeting and say, wow, this is a great management. They have superb plans and they're going to do all of this. And my colleague will say, this is bullshit, right? Because he says he's faking, he's bluffing. They don't know what they're talking. Look at the competitive landscape. Look at where the consumer is going. So again, this becomes very subjective, right? So we said, can we remove this subjectivity? Because आज P&L का जो analysis होता है, balance sheet का जो analysis होता है, वो काफी objective होता है. We have the numbers, we can see the track record, we can see what kind of capex they have done, we can see what is the operating profit, we can compare it to the competition, we can do all of that very objectively. But figuring out the management quality is a bit subjective thing, right? Because you are making a judgment, whether you like it or not, but you are making some kind of judgment on those people, right? So we said, can we remove some bit of the subjectivity and make it an objective exercise? And that is where the birth of this equal, our proprietary module actually happened.
Okay.
So what we said is that we want to evaluate management quality, and that management quality will be evaluated under 5 sub-parameters. It's starting with management integrity. Then we talk about the management capability. Third is wealth distribution to minority shareholders. Fourth is investor communication, because we are analysts, we need right communication from the company side. Otherwise, because of a lot of good business models, but the companies don't disclose, particularly a lot of multinational companies are not ready to disclose enough information. So if we don't have the right information, how can we do any research? And fifth is, of course, liquidity. So these are 5 parameters on which we said we will evaluate the quality of the management. Now, again, within this, we created sub-parameters so that we can very objectively define. So for example, within the management integrity, which is the first parameter, within that we said we will list down publicly available data points so that for all companies, it's an apple-to-apple comparison, right? So we said, what is the promoter shareholding is our first parameter. The thought process here is that investing is a game of probability. And lower the probability of you going wrong, you will reach your goal. A lot of people make this mistake that, stock markets, it's about coming and hitting a 6. Actually speaking, the game of compounding is about avoiding mistakes. As long as one is avoiding mistakes, one will reach the goal, right? That is the most important thing. So the idea is that promoter shareholding, higher the promoter shareholding, lower the probability that they will do something silly, because they have so much more skin in the game. They have so much higher stakes, right? That's the first parameter. Second parameter we will look at, what has been the promoter shareholding increasing or decreasing over the last 2 to 3 years, right? If they've been increasing, we give positive marks to the management. If they've been decreasing, we give some negative marks. Right? The third very important parameter we also look at, promoter shareholding pledged. If you remember, going back to the heydays of Satyam, shareholding pledge mein jo bada scam ho gaya, that was the first time we all realized that what can go wrong with promoter shareholding pledge. And after that, of course, thanks to the regulators, SEBI has been extremely proactive on that, and of course also exchanges. But today we have on real-time basis where promoter shareholding pledge is happening, unpledge is happening, right? So wherever there is a very high pledge, we have seen more often than not that the minority shareholders' interest has got compromised. It started with Satyam, and as recent as Z Telefilms, where we have seen wherever the promoter shareholding was highly pledged, there has been some compromise of the minority shareholders' interest. So that's again another red flag. If there's a high, if it is up to 10%, 15%, it's fine. But if it is 50%, 60%, 70% of the promoter shareholding pledge, it's definitely a red flag for us, right? We will also look at, say, what has been the equity history. If there is too much of dilution, generally those companies have not created enough amount of wealth creation. Companies which have not diluted too much and have kept on reinvesting their own accrued cash flows from the business, and that has generated higher cash flows in the following years, is where the wealth creation typically happens. If you will go back to the heydays of 2007-8, there was this very big trend of FCCB, fully
Yes.
convertible currency bonds or something like that,
Yes.
right? And
Yes.
this FCCB was also kind of an equity dilution, but actually because then the whole currency turmoil and because of the global markets turmoil, वो किसी का convert हुआ नहीं, and it continued to be a big debt, and it has created a mess for a lot of companies, and so many companies
Yes.
disappeared since then, right?
Right.
So
Right.
you know, one of the biggest challenges that I see is that investor community sometimes I feel is, you know, they choose to have a very short memory, but generally as analysts we like to see the trend, and we
Okay.
don't forget, because that is what our learnings are, and we don't want to do the same
Right.
mistakes. So this
Right.
FCCB has been also very you know, very big sticky point for us, right?
Right.
Or say,
Right.
who are your auditors? Are they among the big four? Are they known or are they unknown? So we look at that
Okay.
data point also, right?
Okay.
What is the promoter's salary as a percentage of profits?
Right.
So you'll be surprised to know that there are certain listed companies where promoter salary even today is as high as 30, 40, 50% of the PAT. But that's a very high number. It's a compromise of minority shareholders' interest. Or say, in case of multinational companies, what is the royalty as a percentage of your profits? Or there's something, another very important parameter we look at is inter-party related transactions. We have seen so often than not, where there is obviously at arm's length they talk about it, but when you actually go into details, there are certain challenges when it comes to inter-party related transaction as a percentage of your turnover. That's again something to further probe, right? So, you know, these are some of the points which at least tell us the intent of the management towards the minority shareholders. Directionally, it helps us in understanding. Similarly, we will have parameters on the management capability. We will have parameters on wealth distribution. Like on wealth distribution to minority shareholders, one of the most important parameters is, of course, dividend distribution, right? The higher the distribution, it also shows the strength of the business model. It also shows that the cash flows are returned to the shareholders. But I think another very important parameter that we really focus is on the acquisition, mergers and acquisitions. Whenever there is a large acquisition, we are extremely slow, right? What is a large acquisition? We have defined it if it's more than 50% of your current balance sheet size. And Geetu, we have seen in the history again, if you go back to the just 10, 15 years of history, some of the largest companies in this country, okay, with the best of the intent, with the best of the brains, with the best of the muscle power in terms of the financial muscle power, yet the large acquisitions haven't played out the way, at least for the first 4 or 5 years, the way they anticipated, right? Say companies when Tata Steel bought out Chorus, even till date, it's a drag. When Tata Motors bought JLR for the first 3, 4, 5 years was a big challenge, right? If you look at Bharti Airtel going and doing a large African acquisition, like $11, $12 billion acquisition, it has definitely dragged their returns or you know, ROEs and all of that. Or say Sun Pharma going and buying out Renbaxy. I'm giving you examples which are top 10, 15 companies, or in fact, each of these companies are leaders in their industries. And yet there has been serious challenges with large acquisitions. So this is what we learn from the history. And when something like this happens, again, we say, you know, we need to wait and watch. So generally what we do is when there's a large acquisition, we don't invest for at least 1 year. After 1 year, we'll see if the acquisition is actually going in the direction the way it was anticipated. We are very happy to invest. And there's enough opportunity even there. I'll give you a classic again example on the other side, the positive side. When Tech Mahindra bought Satyam, it was a very good acquisition. We also felt it, but we waited for full 1 year. We saw how it's playing out. After 1 year, we saw that they have actually, you know, accepted the acquisition they have embraced the acquisition quite well. And now it's actually, you know, very positive, very accretive to them. That's when we actually invested after full 1 year. And yet it made a lot of returns for us even after that, right? But the idea is, as I said, it's not about hitting a six, it's about avoiding the mistakes. And that is where this equal model has really helped us. So, you know, I'm very happy to say, and a lot of pride also, that since the time we've had this equal model, almost 11 years now, in our portfolios, there has not been a single stock till date at any point in time where we've had any corporate governance challenge, right? And in this 11 years, there must be at least 150 to 200 plus companies where there has been serious corporate governance challenge, and the minority shareholders' interest has got completely distracted, to my mind. washed out, literally, right? And we have very, very consciously avoided this because thanks to this process and thanks that the team has very religiously, followed this in a very, very disciplined fashion. Sorry, a bit long answer, but I just thought it deserves, your question was so nice that I just thought it will help.
Yes, but there's a question now. The kind of parameters that you spoke about, sir, in parameters पे जो नई कंपनीज आई हैं, जो नई लिस्टिंग्स हुई हैं, जो डिजिटल कंपनीज आई हैं, न्यू जेन कंपनीज हम बोलते हैं, वो कहाँ खरी उतरती हैं? क्योंकि अभी तक जो हमने न्यू लिस्टिंग्स देखी है उन्होंने डिसअपॉइंट ही किया.
Geetu, you are absolutely right. See, that is the whole point, that whenever the new listings also happen, again, history has taught us that we should be little slow with them. There are a lot of good companies in the listing, but out of 100 companies, there will only be 10 or 15 which are going to be good companies, right? So how does one figure that out? So wait it out for the first 2-3 quarters of results, see where the business is headed, see how, because post IPO listing, most of the results will be good for the first 2 quarters, right? Beyond that, how they are sustaining, how the competitive landscape is coming up. You also get much more information when they are listed compared to when they were unlisted, right? But in terms of this equal model also, I think that a lot of these businesses are much better. I'll tell you one very important difference compared to the old companies and the new companies. The new companies, okay, are backed by the private equity investors, okay? Now, a lot of this, not all, but a lot of these private equity investors have the internal very strong governance standards, right? And they make sure that these companies follow these standards. Like, for example, I was just attending a seminar about this week only, early this week. And I was listening to a very leading lady from the private equity space. And, she said that when we invest in our portfolio companies as a private equity investor, we make sure that they have the integrity towards all their stakeholders, including their employees, associates, vendors, right? For example, if they have invested in a finance company, right? And a finance company employee who's a collection person and he's going on a bike and he had a car accident, they are very upset that why did the finance company not take enough action points to avoid this kind of an accident? Did they force him to drive fast? Did they create an incentive to collect money so quickly? Why did he not follow the signal rules? Why was he not wearing a helmet? Did the company provide for the helmet, allowance? So what I'm trying to say is that today, the new age companies, in a lot of new age companies where they are backed with quality private equity investors, actually it has made our life a little more easy, right? As far as the corporate governance standards are concerned. The challenge that you are seeing today because of the new age companies is not because of their corporate, I mean, there will be a few exceptions there also, but majority of the things that we are seeing challenges is not because of the corporate governance standards, but because of the valuations. See, everything is good at a price and bad at a price. So it's a, stock market is a beautiful arbitrage machine. Something that is much more expensive, so eventually people will sell that, and something that is people will buy that, right? So if somebody has come out with a very expensive IPO price, and just because it was too much in fancy at that point in time, because of the global markets, herd mentality, right? वो आपका ज़्यादा दिन चलता नहीं है, right? So it's the valuations which are a problem. Some of these businesses are actually very good businesses. And why I say that also is important that we have to understand that today, these businesses are very relevant from a consumer perspective. As consumers, all of us have now got hooked onto these businesses. In fact, we all are queuing up over there, right? So that is why these businesses have become very relevant. Now, the only question is, are they inherently profitable? So, I talked about 2 parts earlier, the quality management and quality business. The question that we have to ask here is, are they quality businesses? Are they really getting a good value proposition to their customer to eventually charge the customer and make money? right? I'm not saying they have to charge exorbitantly, but a fair charging of whatever services that they are delivering. Can they actually, do that? And can they make a decent profits for themselves is the key question that we need to understand. But today, in today's day and age, these businesses are very relevant because whether we like it or not, the consumer is with them. And wherever is the consumer, eventually that is where the economics will actually play out. The trade will actually happen over there.
Right. So the long list of companies that we classify under new gen, which is the company that you like the most as far as the valuation is concerned?
Sure, Geetu. So, we have made our beginning into that new age businesses. As I said, that we believe that these are relevant businesses. And one business where we have already invested, so that's a disclaimer before I say anything, is Zomato, right?
Okay.
Now, that is one business that we believe has the inherent profitability. Okay. We believe it's a win-win-win situation. It's not only win-win, but it's a triple win, right? And see, in Zomato, in the ecosystem of Zomato, there are three main participants, right? First is the Zomato as a company. Second is the restaurant guys, right? And third is the consumer, right? Now, if you think about it from a consumer perspective, let's start with the consumer first. From a consumer perspective, for the delivery charges that they are charging, right? Maybe it is 25 rupees, 50 rupees, or say 100 rupees, right? For the kind of the time and effort that it saves me to reach that place is, it's not even comparable to that 100 rupees or 50 rupees. That's the first point. Second, even if I look at the basic economics of me going and coming, the fuel cost or the public transport cost or any cost will also cost me so much. Second. Third, there are so many places where I will not be able to reach because I am occupied with something else or rather just call for it. So it's a fantastic value proposition from a consumer perspective, and consumer is hooked onto it whether we like it or not. Now it's become a part of your lifestyle, right?
Yes.
That's the first part. Second, coming to the restaurant guys, right? Now restaurant guys typically pay about 15% to Zomato for every order that comes through Zomato, right? Okay. Now, from a restaurant guy, we have to understand this is a very high margin at a gross level. Typically, if you are ordering something worth 100 rupees, for any restaurant, the food cost will never be more than 25 to 35 rupees, which is what is his variable cost. So the gross profit is about whatever 55 to 65 rupees, right? Now, uske niche uska koi cost hai nahi, because now he doesn't need an extra restaurant, extra table, extra air conditioning, extra lighting. Wo to jitna hai utna hai. This is an additional sales that he's getting because of Zomato, because this customer is not able to reach his restaurant and yet he's getting a new order because of Zomato. So it's an enabler for him. So this 15% that he pays to Zomato is actually a highly profitable business from the restaurant perspective because it is an incremental business. जो रेस्टोरेंट में जा रहा है वो तो जा ही रहा है, वो बंद करके ऑर्डर नहीं कर रहा है. The person who is ordering is who's not able to reach the restaurant. So it's a new order at a high margin. So from a restaurant perspective also, or a restaurant is also a win situation. And for Zomato making this 15% on such a large scale, because it has become now a duopoly business, right? Yes. There are only two players, Zomato and Swiggy, each of them almost at 50% market share. And this market has already a 50,000 crore plus number annually turnover, right? And this is growing at least 20 to 20, anywhere between 20% to 30%, depending on the years, good, bad, ugly, whatever it is, right? But average will be, my sense, 24, 25% compounded over the next 3 years. So in the next 2 to 3 years, this will become a 1 lakh crore plus market where you can easily make whatever 15, 20% kind of earnings from the restaurant guys. Whatever cost that you have to deliver to your customer, you will be able to charge them because that's a great value proposition you are giving to your customer. So I see a win-win-win, in Zomato, and that is where, again, now talking about the management, right? Now, I spoke about the management track record and all of that. Now, these are new managements. Where is the track record we have, right? But, again, very important part here, the way we look at it is, one of the key promoters of this Zomato is the InfoEdge company, right? Now, InfoEdge has been a digital company for the last 2 decades now in this country. the most successful, like, you know, the Naukri.com, right?
Yeah.
And their chief guy, Mr. Sanjeev Vichchandani,
Yes.
for whom I have utmost high respect. The kind of the guy that he is, in terms of his business insights that he has, and the way he has also evolved over the last 20 years. When I first met him during the IPO time, he was superb. But I think he's 10x better today over this last 20 years, right? So he is the guiding force behind this company. I mean, the key management is there, but we have the right guy at the top of it, and that really matters a lot. So again, there we have this big critical management quality, which is what we are extremely focused about.
How optimistic are you on India growth story?
Okay.
And the key factors that have contributed to the structural change that we're going through, and the key sectors that you find would contribute towards the growth of in our country, India.
Sure, Geetu. So, you know, the key is that in the last 2-3 years, or maybe last 5 years now, we are seeing a lot of structural changes in the Indian economy. Okay. What we have seen is Indian economy and also the Indian corporate sector. Okay. Both these places we are seeing decent amount of structural changes. So when I talk about the Indian economy, what we are seeing is that from the government side, we are seeing higher capital expenditure happening now, right? And both central and state government are doing a higher capital expenditure, which effectively means that the need that we have on the infrastructure side is getting addressed at least at some extent, right? So that's a very big structural change that we are seeing today, right? If I go back to 15 years back, 10 kilometers per day, 20 kilometers per day of highway building was a big thing. For the last 5 years, average is now already 25 to 30. And there have been a couple of years where we've crossed 35 kilometers per day, which is a very big structural change. People haven't realized this because this is the underlying factor which is going to drive the whole economy big time. It is the roads, it is the railways, it is the airports, it is the ports, which will accelerate the entire pace of this economy, right? And we are seeing a decent amount of capital expenditure happening from the government side. On the private side also, the capex cycle has revived over the last 12 months now, and it's going to even further accelerate. Now, what is driving this? If you think about it, today the corporate side, the balance sheets have become much solid. The debt equity ratios are very low. The cash flows of the manufacturing sector are exceedingly strong over the last I think almost 24 months now. And there are reasons why it has happened, because before those 5 years, the manufacturing sector had to go through a lot of stress. And during that stress, because they first had this demonetization, then they had GST, then they had COVID, one after another. But during that 5 years, the manufacturing sector actually, kind of holded the fort very well, because they focused on their balance sheet. They reduced their debt big time. They reduced their working capital cycle big time. When COVID happened, they also got their operating cost extremely lean and mean, and that is where their operating efficiencies have come into play. And in the last 24 months, the top line growth, the demand has been very good. So whenever the top line growth is good, your operating cost structures are very efficient. Plus, you don't have enough interest cost to eat it out. And and then the government did a big reform of the tax rates, where they reduced from 33% to 25% in 2019. That is also increasing the cash flows in the hands of the manufacturing sector. So this is a real foundation where the manufacturing sector today has the confidence to go and do the capex. So the private sector capex has also revived beautifully, and it will accelerate even further. So these are some of the structural changes that we are actually seeing in the economy. That's the first important thing. Second, services, and particularly the services exports, continues to do even better, right? Even our trade exports, merchandise exports also did very well in the last year, as you know, it was all-time high. So that's again, this China +1 and Europe +1 is actually playing out. Yes. When we meet companies in sectors like auto and auto ancillaries, in pharma, chemicals, textiles, engineering, so on and so forth, every management that we meet, they are saying what was inquiries over the last few years is now getting converted into hardcore order books, right? So that is the kind of the traction that we are seeing, and that is something giving us a lot of optimism that we are seeing structural changes of this China because of the geopolitical challenges that have happened in the last 2-3 years. India is definitely benefiting, and the government is there to seize this opportunity because they also came out with this PLI schemes, which has actually got very good response from the corporate side, and we are seeing capex already happening because of that, and because of eventually the top line growth will also, I mean, the GDP growth will be very high because of that, right? So these are some of the structural changes that we are seeing. Plus, if you look at some of the high frequency indicators, right? When we look at the railway freight data, it's doing quite well. When you look at the GST collections, all-time high. They are like every month they are just, I mean, we were struggling at 1 lakh crore, 1 lakh 10 lakh, 1 lakh 10,000 crores. 1 lakh 30,000 crores has now become a norm. In fact, we go 1 lakh 40, 1 lakh 50, 1 lakh 60. Now we have to understand this 30-40,000 crores per month is like 5 lakh crores extra per year. And that 5 lakh crores can actually fund your capital expenditure for infrastructure is a very, very big number, right? And the multiplying effect that it can have. So these are the structural changes that we are very optimistic about. Coming to your specific question on which are the sectors. So, as I said, that we believe that the manufacturing sector is a very, very big opportunity over the next 5 to 10 years. We believe we are getting into that virtuous cycle of capex driving consumption, consumption eventually again driving capex. So that's a very positive thing that we are seeing. Globally also what we are seeing is that India is in a good shape because if you see structurally the inflation differential that we had, like US, if had 2% inflation, we used to have 6-7%. So there was a big difference of 4-5%. And this 4-5% was always why our interest rates were higher. This 4-5% led to a 4-5% rupee depreciation every year against dollars, right? Now we are seeing this inflation differential going to narrow down quite significantly. Our inflation may remain at maybe 4-5%, but the global inflation, what was 2%, will probably now go to 3-5%. So because of that, our differential in terms of the rupee depreciation may also come down significantly from 4-5% average to maybe now 3-4% or 2.5-3%. Now that's a very big structural change that we are seeing. And because of all of this, we believe that the manufacturing sector is going to do very well. Now within the manufacturing sector, sectors which have very strong domestic demand base and which also have the opportunity on the export side is something what we are extremely upbeat about. So be it auto and auto ancillaries, then also in the pharma space, particularly the contract research and manufacturing, the CRAMS and the CDMO space, that is something where we are extremely, extremely upbeat about. We also like engineering. Within engineering, you will look at hardcore engineering. You will look at, say, things like your electronics manufacturing, power equipment. We are already seeing demand coming here from the global side, and also the domestic demand has picked up very well. We also like travel and leisure, because today the domestic travel has gone through the roof, both domestic travel and also outbound. So that's also another very big opportunity, because young aspirational India is probably going to travel now 4 times a year compared to what it was our previous generation, maybe once a year. Right? So I think these are some of the big structural changes that we are seeing, and that makes us really, really optimistic.
Thank you, Mr. Shah, for being with us. It was a pleasure speaking with you. Appreciate your time. I have lots of questions which are pending. Maybe sometimes we meet again, we sit again across the table and discuss all these questions. Thank you so much for being with us.
Sure, Geetu. Thank you so much. Really appreciate having with you here. Thank you.
Thank you so much.